Welcome back, traders and investors, to the Benzinga Pre-Market Prep. My name is Garrett Cook, sitting in for the wonderful Joel L. Conan, and I have with me Anne-Marie Baiynd, author and financial analyst. She is a trader, and she's best known for her book, The Trading Book Course, A Practical Guide to Profiting with Technical Analysis. Anne-Marie, welcome.
Thank you for having me. I always enjoy being here.
Well, how are you doing this morning? What do you think of these markets shaping up for this week on this wonderful Monday morning?
Well, I tweeted a SPY chart last night, and it said, here's what tells the tale. And essentially, in the last 5 weeks, every single week has been a reversal of the week before it. And so we've been up and down and up and down and up and down. And so we're still caught in a very choppy trading range. And so for someone looking for investments, some space to say, hey, listen, I'm going to put my money in here for a short-term cycle or something like that, they're getting very, very impatient with the market refusing to draw a line in the sand and step down into it. Now, for me, my thought was the market should shop around for the first quarter and essentially dip down into solid support regions, but it's been holding the moving average, the 50 simple moving average, very, very well, which maybe is a little surprising to me. I expected it to maybe give just a little bit more, but we really are caught in this quagmire of indecision.
And how do we get out of this quagmire of indecision?
Somebody with super deep pockets is going to have to make a move, essentially. I mean, that's really what we're looking at. Everybody's in a space of, no, you go. And so that in itself is causing this little bit of sideways action. And, I'm waiting for it. I'm not really a causation type person simply because I live in the probabilities game. It's all about correlation. And all I'm seeing is charts that are moving really within a range. So you're never in a good spot if you're buying a breakout, if you plan to run it for a long time. And you're never in a good spot if you're selling the breakdown, because it's always going to pop back up into that particular region. And I think it continues to cream people that way because they believe the market is making a move, whereas it is not. And so, a lot of people buying breakouts, because that's really what we've been sort of engineered to do over the time, are struggling just a little bit. Some of the biggest movers that stepped over some really important boundaries was Twitter. We were talking about Twitter having a dreadful time getting over 40, and earnings came and it blew it out just really, really nicely. And of course, it's pulling back this morning, as it should. It should pull back into about, maybe 45, 80, 46 before pulling forward again. That's in a really pretty space. And the one thing that I've been looking at for a while is gold. And I watched it come up at the beginning of the month in beginning of January, and sort of peak out. And I've been waiting for it to come back into the 50 simple moving average. And it did that on Friday, looking at GLD. And so that particularly is of interest to me. If it pops up into the 120 and then continues to hold this 119 region, it's going to try and rebound pretty significantly. So my eyes are kind of focused on there. Full disclosure, I am long from Friday on this because I was waiting for it to come in here. So we'll see how it goes. I wait to pull into the 50 and take the trade there because it gives me a low risk threshold and a fairly high opportunity threshold, which is what created that movement on Friday.
Do you trade any of the individual gold stocks too when you're playing gold, or do you just play the GLD?
It depends. I have played Barrick Gold before, and I have done Gold Fields. It really, whatever looks strong in the sector In general, I stayed away from the individual ones because we are in the middle of earnings season,
Yeah.
and a few of those are reporting this week in particular. And so rather than be exposed to that measure of volatility, particularly since a few of those are still fairly far away from their 50 simple moving averages, I just thought the lowest risk, highest yield event for me was just looking at GLD. But I will consider the individual ones if they are sitting in the right space.
From the chat, we're getting SF Bright, and we know GoPro had a really rough day on Friday there. SF Bright's wondering if you're trading the GoPro and what you think about it.
Well, for GoPro, I also had an image there. The momentum in GoPro is very negative, and so they reported and did not give the street what it wanted to see, and all the formations suggest that GoPro has further south to go. If I look at the chart in general, we've got some measure of support sitting here at around maybe 45.50. But if it does really what it's supposed to do in terms of momentum, we really are looking at a test of maybe 41 to it could go all the way down to 36 if it actually finishes the harmonic that it appears to be sitting in. So nothing there looks like it's ready to be picked up on a bottoming space for sure. We've just got to let that one cycle out. Now it could bounce into resistance and then collapse further to the south, but that certainly is not somewhere I'm going to buy that on the dip at this juncture. There's just too much indecision. And, I love GoPro. I think they're great. They just did not give the street numbers that they wanted to see.
So you like the long-term story here still, or are you just...
I do like the long-term story. I think that we are all completely addicted to chronicling our lives electronically for some crazy reason, particularly if you're in the demographic just below mine.
Right.
And so, with all the agreements that they've got going on with all of the carriers and all the things that they are trying to do personally, I think it's, a great story, but it's never the story that takes a business. It's the management that takes a business. And if they don't have vision and they don't have the skill to execute, you could have the greatest idea in the world and it's still going to fall flat on its face. And so the matter is, does the management team have what they need to have at the helm in order to propel the company to where it could ultimately go, which I believe is, it's a great space. It is really a great space.
Another question from the chat. Yayo's wondering, do you ever play the 3-time leverage products on some of these, when you get a feeling like, the market's turning around? Do you play any of those 3-time leverage products, or you just avoid them?
I tend to avoid them because, most of the time I'm looking to take a trade for a few days or a few weeks.
Right.
I do intraday trade a bit, but I don't really focus on those leverage products because of the load balancing event. That makes me a little bit nervous, and so I will stay away from them in general. But, on a great day with lots of moves, you could really make a lot of money. It's just not an instrument that I choose, not a group of instruments that I choose to focus on.
Yeah, if you're trading those things over or more than one day, obviously. I think
Exactly.
Some people get confused and they think, if I buy the triple leveraged ETF that's following the financials, I'm going to make, if their financials are up 10% next year, I'll make 30%, and they're wrong because those are only triple leveraged on a daily basis, not on the long term.
Yes.
So I think that's the confusing thing where investors get
Yes.
confused. Great trading vehicles, short-term day trading vehicles, not so great long-term investing vehicles.
Absolutely.
A couple
Very
big
true.
earnings reports here coming up, Anne-Marie. We've got Tesla coming up on Wednesday. What are you thinking about Tesla?
Well, I love Tesla. I love trading that stock. I think it's fun to trade. I gotta tell you, the formation is suggesting that a pullback is what we're going to see at the earnings space. Now, for me, when it comes into that earnings space, I'm either going to be looking at some sort of perhaps a ratio spread of some kind of diagonal or something like that. But if what the market makers actually have done a fairly good job in the last couple of weeks picking out exactly how far these charts are going to move. In general, they're pricing them pretty well. And, right now, the straddle looks like it's about 17, 18 bucks, something like that. And so if they're measuring an $18 move, that may or may not give us a good space, but that really does put it somewhere around, if it's here at 217, if we had 18 bucks to that, what is that, 235 or something like that?
Yep.
That's going to give us the average move up, and then the average move down, of course, is going to be somewhere around 200. The formation that I'm seeing in Tesla shows a much wider range than that. So it could be an opportunity to do something like a long iron condor or some kind of something that doesn't have exposure on the short side that's too close to these ranges, because this one really can surprise in all kinds of crazy ways. And it can reverse off of those surprises very, very quickly. So this is a tough one to expose yourself to prior to earnings release. I've always been extremely cautious trading this one because of its ability to gap and then move quickly.
As a technical trader, and we know you focus mostly on the charts, do you just try to avoid the earnings and then trade them before or trade them after, but kind of not make a call through the earnings reports?
No, that's not what I customarily do. What I will customarily do is I will look at the formation, and if it is glaring, if something looks like, wow, that is an obvious bottom, then I will take a directional trade, or that's an obvious top. I'll take a directional trade. If it looks like it's going to expand and the market makers have a very small range, right, not a lot of volatility in there, I'll buy an iron condor. If it looks very favorable and the volatility is very low, I'll buy a strangle. I rarely buy straddles. I just don't do those. But I'll do something like that. And if I think that the formation is showing me some sort of very tight price action and there's a ton of volatility packed into the earnings, the option chains prior, I will do something like a diagonal or some kind of a ratio spread that allows me to sell twice as many further out so I can take advantage of the volatility being there and still expose myself to some profit if it comes into the space. So in general, I don't leave it alone, but I do absolutely leave it alone if it doesn't give me a clear signal as to the highest likelihood of what it will do within a range coming into earnings. And that's in one direction or another. It's extremely rare that I see something that has a bottoming space or a topping space that's really clean. The last one I remember was DuPont, and that was, last earnings season. I could see it coming into big support, and I thought, you know what, that's a directional trade. I'm going to take that one long. Other than that, it's extremely rare.
Okay, we got about a minute left with you, Anne-Marie. Just quickly want to get your thoughts here on oil because we've had this wicked rebound here over the course of the last couple of weeks. First of all, do you think the oil bottom is in? Secondly, how are you playing it?
This move really surprised me. And I trade oil a lot. And so although oil is erratic, it has a tendency to pretty much tell you what it's going to do. And this one was quite big. I think it's an exhaustive state. Here's what I really believe that oil is trying to do. I believe that oil is really trying to test the 50 daily moving average, the 50 simple daily moving average, and that sits somewhere around 54. We sharply rejected that about 5 days ago.
Yeah.
And now we are going to be coming into it again. You know, if a chart moves 1, 2, 3 in 7 days, if it moves, you know, what is that, 15%,
Yeah.
12.5%, some huge number, that's exhaustive. And up moves like that in a downtrending space is really a signal that we've caught the sellers and there's a squeeze rather than a rotation in another direction. And so I ultimately expect oil to come back and test the 48.50 to 48.80 region where the last big breakout space was. If it holds the area, maybe we're looking at a bottom. If it fails the area, then we've got a false break and it's going to come down, retest the region, and collapse further to the south. That's what I'm thinking. So I am only trading oil intraday right now, and it's sitting right at the top of what I see as a sideways range. And so I expect it to come in before the day is done. I expect it to come in before it bounces out. And then, you know, we'll just have to see where these buyers and sellers can shake things out. Right now, things are very undetermined. There are a lot of technical indicators sitting in neutral zone territories, and that means that we're just going to find buyers at support and find sellers at resistance. And intraday, we're looking between 51 and maybe 52.70, something like that. Outside of those ranges, we'll have additional movements up or down, but in that middle, you're just going to have to be really careful about picking your spots and picking them on short time frames.
All right, excellent. Well, thank you, Anne-Marie. We greatly appreciate your insight. It was fantastic commentary, and you know, we wish you well for the week and through this next earnings seasons, especially with the few stocks we were talking about. So, listeners, this was Anne-Marie Baiynd. She's author and financial analyst. She wrote the book, The Trading Book Course, A Practical Guide to Profiting with Technical Analysis. Anne-Marie, thank you for your time. Appreciate you coming by.
Thanks so much. Have a great day, folks.
Okay, cheers.
Thanks, Anne-Marie.